Eve when you join us. Hello, Jimothy, my brother from another mother.
Hello and good morning, Mr. C. Good to see you, bud.
Happy birthday, Eve, my friend.
Well, thank you very much. I appreciate that.
The world celebrates your birthday.
They sure do.
Yeah.
With shenanigans and shamrocks and green beer and Guinness.
Yep.
And, of course, a little Irish whiskey doesn't hurt.
Traditional Jimothy birthday celebration. Exactly
There
right.
we go.
I'm your old buddy, your pal, Johnny C., your air traffic control. Let's get your starting lineup on a Saturday morning. I always have the pleasure to say good morning to Ross Komarinetz when he's with us. He's with Brightway Insurance, Juno Beach. Ross, my friend, how are you?
I'm doing well. Good morning. Good morning, everyone.
Nice to see you as always. Always a pleasure to have Mike Rauch, the mortgage guy from the mortgage firm, with us on a Saturday. Hello, my brother.
Yes, sir. Good morning. Happy birthday, Eve, Jimothy.
Thank you very much.
I didn't know
Appreciate
that until Johnny mentioned it.
You'll be celebrating tomorrow.
Yeah, I'll do something.
Yeah.
And then I like how Jim was throwing in some sound effects right when you announced his birthday, right? He like the crowd went crazy, type of thing.
Yeah.
Yeah, it's cool.
The live studio audience with a response.
Jim's on the board.
And the Jim being referenced as our fearless leader for 12 plus years now. I've told you he runs a top producing Keller Williams team. Keller Williams Innovations. You find the Florida Home Pros team. You find Jimmy D. There's Jim DePola. Jimmy D, how you be?
Hey, happy South Florida, everybody. And yes, I am a pro, and I did do that on purpose. Everybody believe that?
Thank you very much.
Sorry about that. Hey, welcome Facebook, welcome YouTube, welcome everybody on terrestrial radio, welcome everybody on iHeartRadio. Happy Saturday down here in South Florida. We got a lot to talk about today. Ross, this week alone, we had a new bill in the Senate passed to try to expand citizens insurance to other homeowners. We're going to talk about that a little bit. And the same time, the same day, Ron DeSantis comes out and says, hey, Citizens is insolvent. He used the insolvent word. He did, right? And I thought that was kind of interesting. On a national television news station, he's like, I don't think that we can do it if a big one hits.
When was all this? I didn't hear any of that.
I got it. I got the article.
Wow.
So I'll tell you about it. Yep. So
it was just a couple of months ago, you were saying it was solvent.
Yeah. The fundamentals of this economy are strong.
Yeah.
Remember that comment?
Man, changed quickly.
Mike's looking at me.
Which president? I guess
That
it
was,
was GW.
It was George W. Bush right before the collapse, right?
Yeah.
Like 2 weeks before the collapse, and everything just collapsed right after. It's like,
I mean, he wasn't the only one saying it.
No, he was
in his
not.
ear telling him the same thing.
That was everybody. I'm not saying we're collapsing, guys. I'm not saying that. We're just tying like kind of similarity stuff. I'm not trying to thread the needle, though. I'm not saying that. But I've always asked the question, how many years have I sat here and said to Ross, can we afford this? Can we afford this? And, Ross is working on the numbers that his industry puts together. And, right now we have 4.5 billion in the coffers. I don't know. What was the last hurricane? I think it was more than $4 billion in damage. I don't know.
I'm not recalling a number either. But that feels like
not a lot.
Feels like a good amount of money. But if we get a good storm,
well, with over a million, and the other key thing to that, we'll get into it more. But the other key thing is where it hits, and how many citizens policies are there compared to other policies and stuff like that. So we're tale of two cities in the insurance market. Some politicians say we need to expand citizens for certain people because they don't have any options. And you got the governor go, I don't know if we need more people in this game right now. So that's kind of interesting. Then we had interest rates. Interest rates finally took a little breather. Feels good to have a little breather, right, Mike?
The headlines are always
they're a little behind.
Sensational. Right?
Yeah, they're a little behind.
Mortgage rates tumbled. I'm like, what?
That's
what I thought.
No.
Like 2 weeks in a row.
Yeah. Well, it was 2 weeks in a row.
It's made me click on it.
So we got a little bit of break. We're going to talk about that because it's happening. So far, this first quarter of the year is unfolding the way that I kind of expected it to unfold a little bit. So I don't really see a lot of surprises what's happening right now on that part. We also going to talk about what's going on in the acreage. I just want to bring this up. I know specifically a lot of the people that we've worked in the past are truckers. We've worked with a lot of truckers, Mike, right?
Yeah.
Lots and lots of truckers. And now the acreage is banning those semis out in that area. And it's going to be a really big impact for those people. I mean, a really big impact. So wanted to talk about that. It's supposed to start in July. There may be a reprieve in May. We're talking about that. And we're also going to talk about that something that happened to me this week for the first time in for the second time in maybe 12 years, over 1,000 transactions, one of our houses is being tented for termites.
Oh.
So there's an article right now that's saying it's termite season and the attack of the killer termites. So we're going to talk a little bit about termites today.
There's a season for termites?
Oh, yeah, there's a season for termites.
Oh, I guess.
Yep,
all right. I guess it kind of makes sense.
And another thing that happened in real life to me that I read in the news this week, it was kind of weird. I'm reading these articles that go, oh, I'm dealing with that. Right? It's so wild. And this article was about what happens when you have super large assessments from your homeowners association or your condo. Do you really have to pay it if it's like a super large assessment? And I've had a couple of communities. I saw some bubble popping, another potential popping of bubbles. I already talked about the area out by Cape Coral and everything where Ian hit. I think it was Ian.
But Johnny wasn't here last week. He missed that whole bubble.
I'm sorry.
Burst. Yeah.
But we talked about a bubble.
Unless
I'm
you were
sorry,
listening.
Johnny. Yeah, we talked
You
about
didn't catch up for homework.
You could have. You could have watched it on the iHeart Media app.
I
Yeah.
know, and I feel really bad right now.
Oh
yeah,
my
talk
At least
about
some of the
not
chunk
prepared.
videos.
I'm not prepared. I didn't take any
Oh my
chunk
gosh.
videos. Not
Timothy,
even-
how else could he listen to the replay?
Well, of course, the iHeartRadio app, or we have a couple realradio921.com.
massively
YouTube.
unprepared.
YouTube.
Yeah, I
Yeah.
YouTube.
You heard of YouTube?
I have
You do?
YouTube, too.
Facebook?
I do.
Okay.
Yeah.
Spotify.
No Facebook,
Spotify.
really. No.
Yeah.
but-
Spotify.
Yeah, I am woefully
Spreaker.
underprepared for today's
Yes,
show.
TikTok.
Yeah, Apple.
TikTok for
Apple.
now.
I don't talk or take. You know?
Oh, better get on TikTok fast.
Have all those. Yeah, not TikTok. I'm not a TikTok guy. Even though that some of my people I work with are big in TikTok.
Yeah, It's so
I'll
funny.
pass.
They talk about the TikTok stuff. It's like I've never intentionally used TikTok.
Me
I don't
either.
have it on my app, but
Yep.
so I'm like, who cares? But I know that there's tons of people who
Lots.
Yeah.
do.
Couple
You know?
of
Never.
Yeah,
Yeah.
3 or
Yeah.
4 people that are
Yeah.
still on
Yeah.
it. Yeah.
Exactly.
About that.
About half the country.
The only time I open TikTok is if somebody sends me a TikTok link and I just open it in Chrome because I don't even have the
Yeah,
app.
that's
Yeah.
like me. I
Nine
don't
out
have
of
the
10.
app.
Yeah.
9 out of 10 times that's
Yeah.
me sending you some disgusting video that
At
I
least
saw in
half.
there.
Yeah, exactly.
You'll love.
It's bad enough we had to deal with all those petroleum companies all those years, and now we got to deal with the company that can scrape your information and then force the corporation to give the government all the information. It's like, why do you want to be a part of that?
Oh, I don't
You know
know.
what I mean?
Now you're really selling it to me. I don't know. Now I have to get it.
Yeah.
No, we should ban
So,
it.
So let's
Johnny's
get
going to the
explain
Play
the
Store
bubble.
now.
Explain the bubble to
Yeah.
me then, because
oh
again,
yeah,
I'm
so
woefully
the
unprepared.
bubble. When I came back from the National Keller Williams Convention, we met. There were 17,000 agents at that convention. About 10% of the agents at Keller Williams, and they were from all over the country and the world because we're in 44 countries. So I was seeking out a lot of realtors that were in areas that people from Florida are moving to, like Georgia, Tennessee, South Carolina, North Carolina, Texas, California. I was really looking for those agents, but I also stumbled on a couple of agents at the blackjack table that were from
Of all
Florida.
places.
Yeah, hard at work, and they were from the west coast of Florida, and they were talking about how slow their market was and that there was too much inventory. So that really piqued up my ears to say, whoa, too much inventory?
Yeah, that's a
So
odd
what
problem.
happened is over there, Johnny, it's very interesting phenomenon. When the hurricane was about 18 months ago. So a lot of those houses had to be flattened and started over. A lot of the homeowners, these realtors were telling me, had decided that they were going to take their insurance money, rebuild the house, and then sell the house because they didn't want to live there anymore, and just sell the house as a brand new house, new construction. So many people have this idea that there's too many brand new houses out there and there's too many houses for the amount of buyers. So they're seeing prices drop. That's the only place I've seen in Florida where we're actually seeing a region of it, if you will, where prices are starting to crater a little bit. Well, crater might be the wrong word. I don't know how much they're dropping, but the agents look concerned that I was talking to. These were top agents, right?
It also
know
doesn't
what they're
sound like
doing.
bubble bursting is the right word either.
Well, what I'm saying is
Maybe your ball is on the down.
well,
the-
no, the
instead of the
inventory
up.
with the inventory expanding, you're gonna have price decreases.
Yeah.
So that's the kind of the pop is the price. The price point is popping, if you will.
Well, I think it's also unfortunate circumstances. So between like in
It's
our area, right? South Florida on the East Coast
Mhm.
versus the West Coast, we are on the much more desirable coast as far
Mhm.
as population where people want to be, because you could be there. Like you could, right?
That's changing.
I don't know if you want to start a whole East Coast, West Coast rivalry. You know,
well,
those things don't go too well.
And you know I'm a West Coast guy. So.
Yeah.
But I like, so we're just automatically like the side that's more demanding anyway. Just follow the population. Like it's just by numbers alone of where the bodies are. So when you're on the side that it's less desirable for people to move to, and now you're almost over improving in a way because they're all new construction.
Well,
I just feel like
you're off on something. Okay, so the part you're off on, and this has just changed over the last maybe what I've noticed, maybe over 5 years, maybe. So it's pretty recent.
Like that coast is where people from Ohio.
Way more people are leaving the East Coast and moving to the West Coast. The West Coast is way more popular right now than the East Coast, with maybe the exception of Miami. More people would prefer to be on the West Coast. I'm noticing in marketing trends, when we do marketing and stuff, we notice that there's a lot more people want to move over to Sarasota.
I think it'd be great.
Tampa,
It's just density alone is more desirable from that perspective.
But while the state's increasing in population, the biggest increases are over there, not here.
Well, it's because of availability. Remember, they have too many homes.
No, this has been going over 5 years. There's
right.
been a lot of northerners, north central northerners, like Michiganers and stuff like that.
That's like Ohio. The Ohio people.
Yeah,
Ohio. That's where the Ohio people move to.
Yeah. But now it's becoming more common for the New Yorkers and stuff to think West Coast now.
Interesting.
So, but you were right before that it wasn't. It was a little sleepier, a little slower, even though it's beautiful over there.
Oh, it is.
But anyway,
Anna Marie Island. Come on.
Yeah, and
different pace,
Red Tide.
But getting back to what I was talking,
Why you got to do that, Ross?
Red Tide.
True.
Getting back to what we were talking about the assessments. One of the people that I talked to, the building I'm in, people are looking at $100,000 assessment per unit for concrete restoration on the ocean front, right? Plus their $1,000 a month for.
Wait, how much? 100,000 per unit?
And that's
how do you pay for that?
In your building?
Yeah.
That's you have to cut a check for that, huh?
Yeah. Usually you're cutting checks. No,
well,
these people are already paying.
They'll give you like a
couple installments.
I think they'll let you do $1,000 a month for 10 years.
Okay. I mean,
I think they'll let you do that, but your HOA, your condo fee is already $1,000 a month. So
and then when you go to sell in 5 years, they're like, oh, and there's a $50,000 outstanding special assessment.
And that's where the bubble's happening. If I'm calling it a bubble, I don't want to be too dramatic because we don't have full stats to back this up, but I think we're seeing the beginning of a little bit of a trend.
Sure, but this was
the
kind of condos, right?
Yeah, the condos are a big mess right now. Condo sales are down very low. A lot of buyers. It's funny. There's a lot of people that think they want to buy condos, but then when they find out that it costs way more for the down payment and there's a lot more regulations and everything, and they find out a lot of the condos don't meet those standards.
And you're tacking $1,000 a month on top of the condo dues that already exist.
Yeah,
but
just people
as you say that, I noticed like the last couple of weeks, I go, man, we're doing a lot of condo quotes.
Yeah.
Interesting.
Yeah, so
that's because
for like new purchases.
Well, what's happening here? I don't want to say the community because I might be selling this house, so I'm not even going to say the city or anything. Okay, but I've got a condo where the person in June of last year, I had to do a pretty deep dive into the comps. June of last year, that unit was worth between $385 on a bad day, 400-ish on an average day, and 440 on an excellent day. So the condos, depending on condition, 385 to 440. Now they're selling for 230 to 250. Woo. Now that was from last June.
Woo.
Okay. Now why did they drop so much? They have 3 different types of assessments. They have to make up cash reserves. They don't have enough cash reserve, and the house, Michael, we'll talk about this. The house is non-warrantable.
Yeah.
So I didn't even know what that meant, to be honest with you. I haven't seen that in so long, like in the listing.
And generally means it can't be warranted.
I don't really like to warrant things anyway.
So for Ross, everything's non-warranted with Ross.
Yeah.
He has a non-warranted blanket statement over him, hanging over his head. Everything's non-warranted with me. But non-warranted means you can't use traditional financing like Fannie Mae, Freddie Mac, Fannie Mae type of products to buy these because they're out. They're like, you have too many problems with that association or condo, and we don't want to touch it, right?
At least you're dealing with cash buyers, are kind of like cash equivalent, like hard money type loans, or you're doing what's called a non-conforming loan, which is the old traditional subprime loans.
Yeah, you have to use this if you're not doing cash. You have to do subprime or an unconventional loan just to buy the units over there. So what's happened? So this is. I'm sorry.
Is that new?
No. So Fannie, it's kind of like this is a education for real estate agents moment. Like you have to know what type of offers you can accept when you're going to list a home. And so Jim and I have been talking about this for years and years because it's always been this way since I've been in the industry. Condos, when you're buying a condo, not only do you have to qualify as the buyer, but the condo project has to qualify. And whether it qualifies or not is based on sometimes on budget, sometimes on insurance, and it depends on the down payment amount that you're
reserves.
doing. Okay. Yeah.
But if you, so that's Jim sold a condo for my mom.
Yeah.
And now I understand why you had to get all the financials and
look at
for
it
the condo,
because you have to know
or the association
what type of loan is possible. And so like the budget is important when somebody is doing less than 25% down on a purchase. If you're doing more than 25%, you're a limited review and you're not looking at the financials. But sorry guys, frog in my throat.
Yeah, no problem.
The Fannie last year came out with their system called Condo Project Manager, which now you can go in and if a project has been like the project will be listed on their Condo Project Manager, and it might be a status that you cannot, like it's been reviewed and it doesn't matter how much you're putting down. If Fannie says they're not doing it, you can't do a conventional loan.
And that's non-warranted.
So non-warrantable just means that loan cannot be delivered to Fannie and Freddie.
Right.
So then that's why you're in the non-conforming,
right.
I'll call it subprime, but non-conforming world.
So this is what's happened in the trend over there. There are only like 2 pending, and there's like 10 units for sale. And all the units, some of them are in the 4s, which is what they used to sell for back in June, back in the good old days, right? Like so long ago, not even a year ago, right? And then you have a bunch of people in the 2s. And the 2s, some of them are offering to pay the assessments that are coming up because there's future assessments coming, plus assessments that have already been leveled or levied. And some of them are paying the assessments and selling the condo like really, really inexpensively compared to what they were worth last June, just to get out of there. Like we're out. And those are the people usually that don't have the money to carry the condo anymore. It's like they just can't afford it. Like here's another community, Kings Point in Delray. I could talk about this now because my buyer isn't buying in that community. They bought something else. Congratulations, Maria. She bought something else. But in Kings Point, I was stunned because the HOA that we were looking at a villa over there, and the HOA was like either $520 or $580 a month. But we wanted to, well, that's kind of, it's been in the 5s for 10 years now.
But you think they'd spend some of that money on, like drainage.
Oh yeah, the flooding in Kings
all that
Point.
place does is flood.
Yeah.
And it's not like every now and then.
And the buildings are 1960s. There's no hurricane protection on any of the windows, right? There's nothing.
Wow.
So what happened was now that communities, it's, I don't know if it was restoration or reserves or insurance or maybe a combination of 3, but now that same community in the villa part of Kings Point, this one area is going from the 5s to over $1,000 a month, almost $1,200 a month. Oof. Now, most of the people in Kings Point are there for affordability. And even though the HOA is higher than a lot of other HOAs, the services you get are amazing for a senior. If you can't drive anymore, they have shuttle buses, take you to doctor and grocery shopping and everything. It's all built into the HOA fee.
That's great.
So that's all like really helpful to people. And they go there because units used to sell from $50,000 to $200,000, right? But now if you're paying $1,200 a month for the HOA, there's a lot of people on fixed income over there just can't do it.
Nope.
So those people are going to have to sell. It's going to be very sad watching this because a lot of people are going to have to sell just to stop the bleeding from the unexpected costs. And that means we're going to see deflated prices because people are going to have to sell. It isn't like, well, I'll sell if I want to. It's going to be, I got to get out of here. I can't afford this.
Yeah, it's kind of like a fire sale.
And then what I'm hoping is going to happen to this other community I'm talking about where I may be picking up the unit is hopefully those lower priced homes will go out of there. And then when people put their units on the market, those units will be priced at the more normalized prices, not the discount prices, because those people might want to be moving for other reasons, not because they can't afford the assessments, but they want to move north or they want to move to a different experience or something like that. And they're going to sell at a regular price because they don't, quote, have to sell. They want to get market value. So a lot of changes in the condo market. And if you're thinking about buying condo in today's market, it isn't necessarily you shouldn't buy a condo in today's market, but you really need to have a really good mortgage broker or a loan officer to really understand everything about financing, because let me tell you, it's complicated and most agents aren't really up to speed on all of it. So even I'm not. Sometimes I have to ask Mike, hey, what's approved for FHA? And he tells me every time. And I always forget, and I go back. He's like, "Didn't I give you that link?" I'm like, "Only 7 times." But he only gave it to me 7 times.
If you're a savvy agent, the FHA list is publicly accessible. Fannie's condo project manager is not, so you definitely need a good lender. VA is behind a credentialed system, so you need a good lender for that. But I think the lesson is not only for buyers and buyers agents, but for listing agents. Like if you want to be set up to be able to successfully, you might even consider, do I even take the listing, right? Like you have to know what type of financing you can accept. And if you just got to know, like we're only accepting cash offers, right? Or cash equivalent or non-warrantable financing. And that's just good to know, because if you get a 5% down, pre-approval letter from a bank or any lender, you're going to say, hey, listen, guys, sorry, it's never going to close. Of course, you have to trust your lender, and some agents don't like to hear like, oh, it's going to be complicated to sell. But they just, remember the goal, guys. What's the goal, Johnny?
Yeah, to get it sold.
You got to get it sold. You got to get to the finish line. You got to close, baby.
Taking the listing is only half the thing.
Right.
It's like the appointment in Seinfeld.
Anybody
could take the listing.
It's
the closing of the listing. That's the real part.
Yeah.
That's the most important part, is the closing.
And it is funny because, like, when in a very competitive market, agents are kind of, they want business, right? And so the way you get business is not by telling people bad news. You want to tell them good news all the time. And so, getting a pre-approval letter, as important of a step as that is, it's not the goal. Getting into contract is not the goal. Getting to the closing, getting to the closing is the goal. And so you really got to know that you can get to the finish. And of course, that's the way we've always operated, but that's not the way everybody operates.
Right.
So shout out to the listing agents with condos. Call your preferred, your lender that knows what he's doing or she's doing, and make sure that you know what type of offers you can accept.
That's right. FloridaTalkRealEstate.com. That is the one-stop real estate shop. Pros, y'all. These are experts in their field working cohesively together. You get them all at FloridaTalkRealEstate.com. Remember, on Facebook and YouTube as well. Lots of information to be consumed, access, but FloridaTalkRealEstate.com is the hub. You're welcome to join us on air as well. We are live on a Saturday. 877-927-6969. If you want to jump into the conversation, if you have a question, comment, concern, feel free. 877-927-6969.
So with these big time assessments, there was a really good article in the Sun Sentinel. I think the attorney, it's that Gary Singer guy, I think his name is, who's a good real estate attorney down there. And the Sentinel had an article about what happens when you get these big assessments and you don't agree with it as a homeowner. And there's a lot of things that you need to know if you are getting slammed with these big assessments. Number one, start to pay them. If you're going to argue that you feel that your assessment is unfair, go ahead and make that argument and file the complaint or do the process, whatever you have to do, but you got to continue to pay the assessment while you're arguing with them that it's too high. Don't make the mistake of not paying the assessment, because you can slip into foreclosure if the condo or the HOA, right?
Quickly.
Yeah. So it depends. Sometimes, to be fair, because I don't like to scare people, our experience has been, because we dealt with this a lot from 2012 through 2015, Some condos were very aggressive about foreclosing on people that did not pay their assessments or their HOA fee or condo fees. And some of them were very lenient and you could get away with it. But all kind of crazy things can happen. They don't have to let you through the gate anymore if you're in a gated community. Like all kind of crazy stuff can happen, right? You can be blocked from the community facilities.
Correct me if I'm wrong, though, but if the associations foreclosing on you for that purpose versus the bank, isn't their process a little quicker? Am I wrong?
I don't
always perceive
I
that,
don't
at
think
least
it's quicker, but the thing
easier.
that happens is because the mortgage, I don't know if it's easier, but the mortgage is still in front of the condo association. So even if the condo association forecloses, the bank, the first bank, would be paid off first. And if there's any money left over, it would go to the condo. And sometimes there's no money left over.
Right.
Yeah.
So that's why sometimes the condos don't foreclose
Right,
because
'cause
they know they're not going to get any money anyway.
I mean, I think back in, because remember, not everybody, there wasn't a lot of, it didn't happen a lot leading up to 2006 ish, right?
Right.
And then,
Right.
so then these associations not really understanding whether they were going to get their money or not. They're just foreclosing, right? The associations are foreclosing in front of the first, and they end up not getting anything, right? And they got legal fees, and then there was a long process, and then they end up not getting any money at all. So I think some of the associations have wisened up that it's just not worth the effort to foreclose. Now that they can, of course they can, and that a foreclosure sale can happen, meaning the HOA forecloses, your home gets sold at the foreclosure sale, you're done, right? The new owner has to deal with the existing liens on the home and everything. So you don't want it to get to that point at all.
And the difference now today compared to when I was doing it, everybody's got well, not everybody, but lots of people have a lot of equity. There's a lot of equity in these houses or condos. So I think they said 40% of everybody in the United States that owns a property, I think owns it outright or something like that.
Although you just mentioned,
it's like crazy. It's a crazy high number. It made my jaw drop.
But you just mentioned a project that went from 400 to 250, like in a year, which is unusual.
Yeah. So, and that's all a reflection of these crises that the condos and the more condos than HOAs, but the condos are dealing with right now, and not just oceanfront and intercoastal. We're talking about inland, because one of the communities I'm talking about is inland, right?
They got condo like projects. The buildings kind of got a triple whammy. Number one, they had the structural reviews, right? These things where maybe they have been putting it off or maybe not taking it so seriously. They kind of got pinched on that. Then there was insurance increases as a result of elevated risk, maybe because of the structural stuff or insurance companies just having to, increase their bottom line. And then also they're forced now to do sufficient reserves, right? And that came down, and that was a change that happened in the past couple of years, where it's like you could kick the can on reserves and you're underfunding your reserves. Well, now you kind of have to fully fund your reserves. So that was a triple whammy as far as like spreading costs to the members of the association. And it happened within, like a 2-year period.
Yeah.
And let me tell you, if you're a savvy investor right now, hint, everybody listening, if you're thinking that you'd like to have condos in your portfolio, the way that I would go about doing it is you find out the communities that are dealing with the problems and that they're in shock, but they're dealing with them, and they're dealing with them in the right way. They're fixing their concrete restoration.
Yep.
They're building up their reserves, right? They're dealing with the insurance policies, and they're really doing it the right way and ripping off the Band-Aid. Find the weak sellers in that group of people, the ones that just like, I can't take the hemorrhaging anymore, I got to get out. And then you get the low condo price. Because think about it.
Just make sure they allow short-term rentals so you can,
if that's
Airbnb it or whatever.
And that's a little harder.
Yeah.
A lot of them don't, to be honest with you. But, if you're buying something today and the unit's in good shape and you're buying it 250-ish and it was worth in June 400, right? And then they fix all the problems. There's no reason why those units are not going to go back up, at least to the prices they were in June.
It sounds to me like the good business to get into is the concrete restoration business. What are they doing? $100,000 a unit. How many units are in the building?
My building has about 100. There's like because they don't count floor 13 and stuff like that on the building and all that.
It's always hidden.
I think it's like 11 floors and probably about 12 units per floor. So 120 units.
It's weird.
So it's
My
a 1
uncle
point-
Carmine just got into that concrete
Yeah.
the other day.
Yeah. I
He's
heard he
moving
was
from
in
waste-
waste management
Yeah,
up in New York,
Yeah.
right? He was in waste management.
So this
Yeah.
concrete restoration's a $1.2 billion job.
I
Minimum, probably.
no,
right?
I thought that would be 12 million, right? Wouldn't it?
It's 100,000 per unit.
So 10
Times 10
units.
is a
Yeah,
million.
So what? Yeah, so about 12 million, 12 floors,
Oh yeah.
12 floors, about 12 million bucks.
Oh, I got you. Yeah. Sorry.
Not-
Sorry.
120 units.
12.
Yeah.
Yeah.
100,000 per unit times 10
Roughly.
units is a million times.
Yeah.
12
roughly-
floors.
roughly
Okay, yeah,
10,
sorry.
10, 11
I got a little
floors, yeah,
crazy.
yeah.
All right, so
Okay.
$12 million project.
Yeah, but
Yeah.
that's a lot of money. And
Yeah,
you know
It's
what?
like 1.2 per floor, though.
Better
We'll
head
just do
back
a
to
couple floors.
Better head back to
So,
Vegas.
I love living there, but I would not want to buy there. Not at least not right now. But so anyway, here's some tips for you. If you get slammed with these assessments, don't stop paying while you're arguing. If you think you have a case, go ahead, but don't stop paying because you can get in a lot of trouble. The other thing is
Get on the board.
yeah, get on the board, then get more headaches and more white hair dealing with everything, right? But that's the most important part. Keep your payments current. While if you're arguing, you're probably not going to win. If the whole board voted on it, have fun with that. You might try to stop the surf coming in. Have fun with that. But these assessments are a really big deal. And, and then it becomes very hard for people whether to stay or not.
Yeah.
That becomes the issue. Well, if I just go through all these assessments, the worst is over and then I get to keep my place. But one of the people I was talking to, not the same one, not the same unit, but a similar issue. And that person, they already know that the community is talking about 2 new assessments that are going to be coming out after the ones they've already ratified. So I'm like, well, when is the hemorrhaging going to stop?
Right.
You might want to just get out, take the equity you have and place this someplace where you're not getting beat up like this with these unknowns. And it's also very concerning for people who are on fixed income or getting
Sure.
older,
Yeah.
seniors,
Yeah.
that are trying to budget for their future. And you have all these shocks to your economic system in your housing. So if you have any questions about any of this, we can help you. The law office of Paul A. Krasker can help you. So just give us a call. We'd love to talk to you about it.
Beautiful. FloridaTalkRealEstate.com. You want to do a little reset?
Yeah, let's do a reset.
Beautiful. What are we going to get into when we come back?
We're going to get into the insurance stuff with Ross and talk about, are we solvent? Are we not solvent? Do you think it's a good thing that Citizens wants to expand? Does it want to shrink? Who the heck knows what's going to happen? Because we're Florida.
Yes, we absolutely are. And it's a beautiful place to be. That's why we choose to be here.
Yeah, I
Thank
love
you
Florida.
for choosing to be with us on a Saturday. You're welcome to be a part of the program. 877-927-6969. It's a quick 4-minute break. If you want to dial that up now, we'll be talking insurance. If you got questions, comments, concerns, go ahead and dive on in. Jimothy will line you up. 4-minute break. We get back at it. Of course, if you're not comfortable on the radio or if you need access to one of these pros, maybe all these pros, remember Florida Talk Real Estate is .com. Your one-stop real estate shop. We call it that for a reason. Man, these people are phenomenal. And you listen every Saturday. You hear amazing every Saturday. Well, they perform it every day. Experience it all. FloridaTalkRealEstate.com. We're back in 4 minutes. Florida Talk Real Estate right here. It's Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Real Radio weather.
From the Gordon & Partners Weather Center. Have you been injured in a motor vehicle accident? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Charlotte Carl. Temperature is still on the rise, forecasted to top out in the mid to upper 80s across the area. Moisture remains low today, increasing tomorrow as we do see a chance for showers and thunderstorms in the late afternoon and evening time. That's not before we hit our afternoon highs, which will be nearing records, upper 80s, low 90s across the area.
This report is sponsored by Allstate. Some people just know the best rate for you is a rate based on you with Allstate, not one based on anyone else. So if you drive safely, you could save money. Good to know. Visit allstate.com or call for a quote today.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
There it is, toll free, 877-927-6969. You're welcome to join the program. We are live on this Saturday, March 16th. We like to call it the eve of Jimothy's birthday. I'm your boy, Johnny C. Jimothy is our producer extraordinaire. What's up, my dude?
Hello, and good morning.
Good morning. We are live streaming every Saturday. You can join us on Facebook and YouTube. Florida Talk Real Estate on both. Thank you for being with us. Always remember, Florida Talk Real Estate is a .com. That's your resource for all things related to real estate. The one-stop real estate shop, floridatalkrealestate.com. Ross Komarinetz with Brightway Insurance is with us on this Saturday. Juno Beach is where you find that Brightway. What's up, Ross?
Not a whole lot, man. I spend a lot of time there.
You do it.
Call me.
You know it. Good to see you.
Hot Ross.
Yeah, sneak it in. It's birthdays tomorrow, so
Gets to do whatever he wants.
he feels pretty loose over there.
Don't blame that on me.
Mike Rauch with us, the mortgage guy from the mortgage firm. Hello, Mike.
That's right. Hello.
Good to see
You know, my birthday is next week.
Is it?
It is.
I never retained that. I will now.
Well, you don't need to.
All these
it's not
March-
important.
It
Just
is.
when you think of Timothy's birthday, think of Mike's birthday.
Mike's coming up.
Yeah, exactly.
Yeah.
And
Next
now
Sunday
I'll
as
know
well?
too.
exactly a week after? The
No,
24th?
I'm 21st.
21st. All right.
The first day of spring.
We'll celebrate together.
Is that right? Yeah, spring.
Yeah.
Do something. You got
Sure.
any of those drinks you were talking about earlier back there with
I
you?
might.
Irish whiskey,
Maybe.
It's not too early, right? It's almost 10.
Too
It's
early.
It's gonna be 11 by the time we get out of here.
It's 9 o'clock somewhere.
Yeah.
I love the too early aspect. Like, what if you haven't stopped drinking?
Listen,
Just continuation.
I've been there. I've been there.
Yeah. Sometimes you wake up, you're like, I need a little more of that, don't you?
I remember Tiffany rolled out of bed one morning. And she's like, "You guys are still up, right?" Like, had some buddies in town. Haven't seen it in a few years. She's getting out of bed like 6:30 in the morning. We're still out on the back patio,
Like
going strong.
charging, just
Yeah.
charging ahead, just
Yeah.
straight ahead.
You guys
we
are
go.
still up.
That's
Yeah,
good.
why? What are we doing? Yeah.
What
Break
time
it-
is it?
Break out the cornhole. Sun's coming up.
You give me a new cigar?
You're about to fire up the grill, getting a little hungry. Jimmy D is with us as always, our fearless leader. He runs a top producing Keller Williams team. I've told you for 12 years now, 12 plus years. Good Lord. Man, you have been dominant for a long time, Jimmy D. Keller Williams Innovations. You find the Florida Home Pros team. My guy, Jimmy D. Jim DePola. How you be?
Thank you, Johnny. Yeah, I just got a letter from the Keller Williams Regional saying I was like, I don't know, like number 7 in the region for individual agents
Nice.
in February. So I'm kind of swinging for the fences here.
Boom,
Always.
lucky number 7.
Yeah, we're trying. Yeah. I think part of it's that it's a very slow market. I'm like, really? I'm number 7? That doesn't make me feel good for some reason. So it's always funny. No, but a lot of changes going on in the industry. We'll talk about that maybe a little bit later. But first, let's talk about the changes to the insurance industry. So obviously, Florida is known nationwide right now for having a crisis, which we've been talking about for a while, about how expensive our insurance is. It's about 2.5 times higher than the national average of Florida is. Although we are seeing, to be fair, we're starting to see other parts of the country having insurance problems that are
Yes.
similar to ours.
Nice.
Yes.
Cheering that.
So
Yeah.
we're not the only.
I mean, it's
so we're
all
not
over.
the only ones now.
Yeah.
Does that make you feel good, public?
It's better.
Yeah, I mean, because we kind of talk about how bad it is here all the time, and I think a lot of people just think like, "Oh, Florida's just screwing it up," But these same problems are happening across the country in the insurance industry.
It really is.
They are.
Flooding issues, wildfire issues.
The carriers are having the same issues where they're saying, "You know what? We're not going to we're not offering. We're pulling out." In other states as well, rates are going up in other states. So it's not, even though things are kind of magnified in Florida because things typically cost more here, whether it's real estate, insurance, whatever. These things, it's happening everywhere. It's not unique to us.
It isn't. And the way, bless you, Mike, the way it looks to me is like Florida is like the tip of the spear, if you will, of this issue, right? So we're right at the cutting edge of, what's going on with it, but that doesn't mean that other people are going to have the same problems in other states.
And to be fair, Florida has always been more expensive than the rest of the country as far as insurance.
Yeah, of course. Because of the natural disasters that we have in the state, and then of course the fraud.
Number one.
You have to count the fraud in there. That's really what made us famous, is the amount of fraud. It wasn't just that we got slammed with massive hurricanes and flooding over the years, but the fraud is, what is just the cherry on the top.
Yeah, I mean, you look at the last, 12 to 15 years in the insurance and the fraud that the insurance companies have had to battle, from assignments of benefits with water claims. That triggered a water damage cap on most older homes, where the most a company will give you is $10,000 for water damage. Because of that, now then we had all the roofings, fraud or excess, whatever you would like to call it,
Claims.
yes, that have now resulted in higher prices and restrictions on roofs, and I don't know what you do,
I'm wondering if eventually, and I'm just throwing out an idea here, do you think eventually insurance is just going to get so expensive and so risky for the reinsurers and everything that they start just saying, okay, you're going to pay X amount of dollars a year, and your roof is going to be prorated?
They're starting to do that.
Are they
They're
starting to do
they're
that?
starting
And
to
so,
do that
like,
option.
if you've had a 5-year roof and it gets damaged in the hurricane, they're only going to give you credit for what's left of the life of the roof. And then the other 5 years that you already used up, you don't get that money, and you're always going to be paying for part of the roof.
We're seeing that carriers are, starting to offer that in order to, mitigate what's been happening. However, I did see a request for insurance from a lender that specifically said no actual cash value on the roof.
So they're not covering the roof.
No. So the lender said, hey, on the insurance, it's got to be 100% replacement cost, whatever they put on there for, for the dwelling coverage, maximum deductibles of this, and also no actual cash value coverage on the roof. It had, for the lender to accept the policy had to have replacement cost coverage on the roof. It couldn't have that ACV option.
Right.
So while there's an option,
lenders, right?
Yeah,
the lenders might, because they want to be protected.
Right. So the carriers are saying, okay, hey, we're going to make, hey, we'll try and make this more affordable. But then now the lender may not accept that policy.
So let's go to the mortgage aspect. This is kind of fun. So let's go to the mortgage aspect now. So let's say that the industry changed that where the insurance companies would allow you to deal with the roof separately as part of the regular policy, but that would mean that the homeowner has to have the wherewithal when the roof is damaged to make up the difference that isn't covered by traditional insurance like today.
Yeah.
Could you imagine a scenario where mortgage lenders would take that kind of thing into consideration and approve it?
They'd
have to
not
change
without
standards,
some kind of
right?
coverage, right? So I understand why they're making the distinction. So when you get your insurance, the home is recovered at replacement cost, and then your contents can be covered some way, somehow, or not even covered at all, like your personal property. And so the home itself is always covered at replacement cost. So now you're taking an individual piece of the home and saying, hey, we're not going to cover this part at replacement cost. We're just going to cover that at used value. And so I can see why, essentially Fannie, Freddie, FHA, VA lenders, the guidelines are going to require the home itself, the security for the loan, to be covered at full replacement cost. Now, if let's say the insurance moves into a world where you're kind of like a la carte coverage, like your windows are covered at replacement cost, your walls, right? So what's the solution? Some sort of like a mortgage insurance, right? So a forced insurance,
almost like a
premium,
PMI,
like PMI, but to cover insurance
gap
deductible, something like that. So I could see maybe it goes like that.
And then what would they purchase insurance with that? Is like that
somebody will come up with a product.
Yeah,
some actuary will come up with something
like
where, hey,
cap.
it's going to cost, theoretically $1.80 a day, or or whatever, $100 a month to provide X amount of coverage.
Maybe we just invented a new thing here.
We just created a business model.
Right.
That would feel like a good lane to be in.
Yeah,
you
can have that type
Hey,
of
Jimmy,
a la carte
can you edit
insurance.
all this stuff out that we're talking about right here? Because I don't want
It's all dumped.
The group in the room wants 10% residuals on anybody who takes the idea.
I would build it to ourselves.
I was more surprised that the lender was aware of it.
Yeah,
that it was specifically on the request for insurance that it meant, and it wasn't something we weren't. The policy that we were writing had full replacement cost on the roof, and I wasn't concerned about it, but I was just like, oh, look at that, they know.
Yeah, and it's kind of like because what we do right now is we require some level of assurance that the home is covered at replacement cost, and so usually that's indicated on the evidence of insurance, right? That it's 100% replacement cost. If it's not there, we get some sort of confirmation from the agent, but it's kind of like, hey, whatever you tell us, we're going to roll with it. So at some level, somebody must have got wind that maybe a certain carrier was doing this, or maybe an agent let it, on the evidence of insurance, they're like roof at ACV instead of replacement cost. I don't know. Something like that, Ross, but something slipped through.
Yeah, no, I was just surprised to see it.
Right.
Yeah.
And that it was that it made it ineligible to be whatever. As we're talking about like the things that the insurance companies are trying to do to offer some sort of relief. Hey, now it's not the insurance company's fault, it's the mortgage fault. It's mortgage fault.
Yeah,
can't blame me anymore.
And it could be maybe it's something where like that that trend for insurance is only for people who don't have loans, right? Which is
Yeah.
a larger
Right.
percentage. So
Right.
maybe it's like, hey, as a if you own your home free and clear, you can have this type of coverage. If you
Right.
got a loan, they're just not going to allow it.
Yeah.
Right. Getting back to real world, because that was hypothetical. What if? There's a new bill that I think it was passed by the Senate. And it says, the Florida Senate passed it. It's a new citizens insurance bill, and what this is, it isn't going to affect. Well, maybe Ross is going to tell me different, but this is increasing the coverage for the home values.
The dwelling
That
coverage.
are more, the dwelling coverage that's worth more than $700,000. They're trying to bring it up to $1 million.
You can get $1 million in Monroe County. I think.
Monroe and Miami-Dade,
Yeah.
yes. But they want to do it statewide. Well, actually, let me take that back. Only in zip codes where they feel there isn't the reasonable degree of insurance competition. That's the quote, reasonable degree of insurance competition. So if you're in one of those zip codes where you don't have a lot of insurance options, they're trying to allow you to go into Citizens even if you have a more expensive home or dwelling. So that's what they're trying to do there. And
So
they're
what do
saying,
you consider options?
when you say, I mean, like who else do you have?
I mean, what? One option, 2 option, 3 option? You know, like how many options do you need before do you know
for a
what I mean?
reasonable degree of competition?
Correct.
How about one?
It doesn't say in here.
One
I
additional.
would assume that Citizens and somebody else.
Yeah.
I mean, here's the thing: if your home costs more than $700,000 to construct, right? Not real estate market value, but just to build it. Like the land is already part of it. You're already at a pretty expensive value, I would say, market value. And so, Ross, like there is insurance carriers that cover that stuff with aren't your traditional, but they just cost a lot of money, right? Like,
well, I mean, we have
Lloyds of
carriers
London
that will do over 700.
Yeah.
You know, we have carriers that will do over 700. But then it comes like if your roof is, you know, just a little bit too old where, you know, Citizens would take it, maybe, you know, it doesn't meet their guidelines. That's where you kind of fall into that gap of, hey, it would be eligible with this carrier, but the roof is just too old. But it's eligible with Citizens because, you know, they're good with the roof as long as they have 5 years of useful life left, but it's over 700. So that's kind of the gap where we're seeing that kind of problem. And then, the policies do get expensive, but that's when like the roof is too old. So at some point, hey man, you got to replace your roof.
Yep.
Do you know what I mean? And I think the reasoning behind where they have that line is like, okay, so that's about called a 3,000 square foot house. It's a pretty big house,
right?
And so I think the idea behind it is like, if you can afford to buy a 3,000 square foot house, we're not going to quote unquote subsidize your insurance,
right?
You know.
And with Citizen, like I feel like 700 was a recent increase, right? Because didn't it used to be 500,000 was their limit, or has it been 700 for a while?
For as long as I mean, you know, up until
I'm just making it up.
4 years ago, we never wrote a Citizens policy unless we had, you know,
and that's another thing that's kind of depressing about this article. We're up to 1.164 million policies in Florida right now. I remember a few years because we were up over 1 million when we first started the show, and then they started sloughing people off because we didn't really have a lot of hurricanes for a long time, and it really helped. We were actually seeing dropping in insurance for years.
So we hit 1 million in probably August of 22.
August of 22. Now I think we were as low because they were trying. We were at 1 million a few years before that, and they tried.
It didn't. I'm looking at all the.
I thought it was. I thought
count.
Like from 2012 through.
Maybe way back then. I'm looking
2012
at,
through
2017.
Okay.
2017 there was 448.
Right, 448,000. I was going to say about 500,000 is what I would say at one point, and now we've more than doubled. We're back to where we were before we started seeing it go down to 448, if you will.
We peaked at 1.4,
and
we're back down to 1.16.
And I just looked in housing units, total housing units in Florida, 2022. So it's gone up since then. Was 10,250,000.
10 million. So 1 out of 10.
Yeah, so you're basically 10%.
So I think
10%.
it's probably like 80. I think it's like 17% or something like that, or about what the about the policies in the state Citizens has.
So I was wrong of that. It got passed by the Senate. It was in the subcommittee, and now it's going to a full Senate vote. I don't know if DeSantis, even if it passes the House, I don't know if DeSantis is going to approve it, because he came out with this report.
He thinks they're overexposed.
Yeah, so he came out on CNBC on what date? On this was I can't believe because we didn't have a couple of shows because of the Keller Williams thing. This was February 28th, so it was a couple of weeks ago.
Okay.
But what he said was, in the interview, he said first of all, to set the foundation for this story, the federal government about 2 months ago, I don't think I reported this on the show because I forgot. Like 2 or 3 months ago, the federal government said that they wanted to investigate the state of Florida's insurance industry to see if they really had the money, because some politicians up in DC is like, we don't think Florida is running their insurance policy right, the state run one, and that they can get in big trouble, and we don't want to foot the bill as the federal government.
I feel like I remember talking about that.
Yeah, maybe we did barely mention it, but I haven't heard anything about it since then. I didn't read any articles. Didn't seem like anything was going on. But Governor DeSantis brought this up in the interview himself. So they were talking about insurance here, and he said that, that he's concerned that they might be insolvent. And the actual quote is, he said, this week, Governor DeSantis weighed in on the issue, telling CNBC that Citizens is not solvent. I shouldn't have said insolvent. It's not solvent. Okay. Not solvent. And we can't have millions of people on that, meaning Citizens policy, because if a storm hits, it's going to cause a problem for the state. And what people don't realize is Citizens, if they don't have the money, at first, everybody, tell me if I'm right about this, Ross. The first thing that happens, everybody in the pool of Citizens has to pay an assessment. Am I correct? Like an increase to make up the difference. If there's not enough there, then I think the second level is all homeowners insurance policy owners pay an assessment. Then if that isn't enough money, then they go into the auto insurance. Everybody has auto insurance to pay an assessment there.
What?
Yes. So
you spread the emergency.
That's what's going to happen if we don't have enough money. And we've talked about this on the show a bunch of times. That's what would happen. Now, what I'm wondering is, if you own a house and you have Citizens and you own a car, are you going to be assessed 3 times?
Yeah.
Wow.
If it gets that bad, I guess.
Yeah, if it got that bad.
Well,
And I'm not hoping it's going to get that bad, guys.
Yeah.
I'm just saying. But
Citizens has $5 billion now.
Right.
By the end of this year, they're projected to have $6.3 billion.
Okay, so that's healthy increase, 20%
in the coffers.
Yes.
Okay.
As a surplus.
What are their expenses, or is that this?
No, that's surplus.
Okay.
That's surplus.
Yeah, surplus.
Oh, that doesn't sound like insolvent.
No.
Or not
so
solvent.
I believe they clarified it is, if we kept on going at the rate that we are if we keep adding a policy on, then yes, if the potential would be, yes, it would not be quote unquote, that could happen, but
so
seems like things are going in the right direction as far as building a surplus as well as offloading policies.
Yeah, so that's I guess what we have to keep an eye on. Can they keep offloading the policies, or are they going to start adding more than they're dumping off? That's called depopulation. Am I correct, Ross? So there was a quote in this article. Actually, it was a CNBC story, but it was the WPTV Channel 5 report about the CNBC interview. So they interviewed a resident of West Palm. Her name was Lori, and she said that she was getting depopulated and booted out of Citizens, and she said that she had a choice between slide and Florida Peninsula. Now, just so we can explain depopulation again, I think what happens is in order to get people off of Citizens is, or somebody, the state insurance regulators or something, is sent us a notice to Mike and saying, hey, Mike, there are 2 companies besides Citizens that can insure you right now, and they're less than 20% more than you would pay at Citizens. So pick one of these 2. Is that correct, Ross? That kind of happens that way?
So it happens 2 ways.
Okay.
One hey, this carrier has decided to offer, this private company has decided to offer you coverage. The premium is X, whatever, call it $4,000.
Mm-hmm.
Citizens expected renewal is $3,000. You can either stay with Citizens because it's less than the
4,000.
The increase is more than 20%, or you can move to the private carrier at that premium. If you don't make a decision, we will make that decision for you. So there's an optional.
Will they move you?
Quote,
Is that
unquote.
the decision that they would make?
Yes.
Okay.
It's typically they're moving.
Okay.
So that's the optional one. Then the second one is, hey, either this carrier, it could be one carrier, it could be a few carriers have decided to offer coverage. The premium is $3,200. Citizens expected renewal is $3,000. So, choose one of these two companies or whatever. We're going to move you to that one. It's automatic where there is no choice.
So if it's within 20%, you're forced to go. If it's
more
above
than
20%, you
then
have
you
the
kinda
choice
have
of
a
staying.
choice.
You
You
have the
wanna
choice,
stay
but
or not.
But you gotta make the choice.
You
But you
make the
have
choice.
to activate that choice. It isn't.
Absolutely.
You have to proactively say I'm staying, or
Yeah.
they're going to boot you out.
Yeah,
You have
and
to
I mean, you
choose.
can when it renews and that premium is way higher, and you
You could
didn't
go
make
back.
you can go back to Citizens, but you have to go through the underwriting process again.
Mhm.
You got to get a new, make sure you have a wind mitt that's less than 5 years old, get a new 4-point, all that stuff, and go back through underwriting again.
This is really grade A stuff, people. I mean, people listening to the show right now, if they have a house or they have a condo or a townhome and they own something, this is really powerful information Ross has given you, because, if you get the letter in the mail and you're reading this stuff, it's very confusing. I know, because
It is
people have called
confusing.
us. It's very confusing. They don't know what's going on. They're wondering, am I getting kicked off my program, kicked out of my policy right now? Sometimes you are, sometimes you're not, but it's hard to even tell where you're standing on that. So all you got to do, right, Johnny?
FloridaTalkRealEstate.com. It's one of those mantras that we've been sticking to for like 12 years.
A little bit.
It really is.
A little bit.
Your one-stop real estate shop. Know it, use it, love it, share it. You got a team of pros, including Ross Komarinetz with Brightway Insurance, Juno Beach, to handle all your needs, informational, transactional, everything in between. If you've been listening for the 12 plus years, it's about building relationships in the community, making sure that they're doing right by you, because the business comes. But when you need pros, you got them at FloridaTalkRealEstate.com. I also want to notate that you could actually save money in the Depop too. It's possible. Yeah.
I was going to say you called.
Did you? You sound like you saved. It sounded like you did.
I'm like, well, I might be the only one, but
Tell me.
I've seen it.
So what happened?
The estimated premium renewal for Citizens was like $600 or $700 more than what they were moving me to. So I was
Took
like,
it.
all right, well,
Nice.
I actually, I was like, is this okay, Ross? He's like, yeah, they're good.
I was going to say it's a really good time you can shop too. Like what they're telling you may not be the only choices you have, right? So you call Ross and he's going to say, well, yeah, that is your only choice, or hey, here's another one, or if we modify coverage a little bit, here's another option. So it's a good time to review.
And we've had carriers kind of loosen their roof guidelines from when we originally wrote whoever's policy was originally written with Citizens 1 year, 2 year, 3 years ago, where that was the only option. Now we've got carriers with looser guidelines, and some of those people have put on new roofs since then, and there are more options. So just because you have Citizens,
it's also possible if you get a different inspector out there, your roof can get younger.
I've seen that. I've seen that.
La 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 la.
Well, you know what? I've spent many evening with Creek, who'll be coming up with the locker room. Who'll be like, she's like 27. He's like, she's like 40. I'm like, all right, so depends on what you're looking at,
I know, right?
Before we move off, I had one more. We talked about the way that the insurance passes on to the consumers, right? Or more than the insured. There's a fourth option, I think, which is they start a GoFundMe.
Yeah.
DeSantis is going to start a
DeSantis
GoFundMe.
GoFundMe for the Florida insurance.
Yeah.
That's funny.
Hey guys, we've already hit everybody up for everything we can.
Yeah, that's level 5. It's the GoFundMe.
It's gonna be force level GoFundMe. Yeah, that's what it is.
Oh my gosh.
Oh,
So look, insurance, like condo buying right now, is very complicated. You know, if you need a pro to help you, we got a great one right here, Ross Komarinetz. He gives you great information, not a high sell at all, and gives you really good information, honest information, and information you could use, whether you use Ross or not. So just give us a call. We love helping people.
A salesman, Ross is not.
Yeah, salesman's not. I mean, Ross is not a salesman. He's real about all this stuff, and we love helping people. So, you know, even if I know there was a guy who called a couple weeks ago. I don't remember what his issue was. I didn't get that involved because I was pretty busy at the time. I kind of pushed him over to you. But what happened was later he told me that he was getting a citizen's policy, but he wasn't going through you because his citizen's policy was cheaper. And I didn't have a time to stop and say, hey, something's wrong, because the policy is going to be same no matter where you go if it's the same coverage. So your coverage is different. So if you're going from one company to another company and you're using Citizens and you have a different number, it's because you have different coverage than the two policies have different coverage. Correct, Ross? Is that
yeah?
Guaranteed?
I had somebody tell me, I heard that because you're down in South Florida and things are more expensive there, that if you write me a policy and whatever,
like
the
Lake
central
City
of Florida,
something?
that your rates will be higher because of where my office is located.
Based on your office location.
Yeah.
But you are close to the beach.
I'm like, all right.
Yeah, you're too close to the beach, Ross.
Yeah.
You're too close.
Yeah. All right.
So if you have questions on insurance, give us a call. We're here for you 24/7, 888-973-7828, floridatalkrealestate.com. Do you mind if we power through, Jimmy, since it's a little after 10? Let's go into interest rates just real quick.
Finally, the good news.
Yeah, the interest rates. So, Mike, I've been, to be honest with you, even though we've had a couple buyers go into contract recently. Congratulations, Joe, in April. Right?
Yeah.
And I think there was somebody else that we just went in contract with, Mike. Like David, I thought put him in contract.
It's possible.
Yeah. But I haven't really been keeping up on the interest rates. And to be honest with you, the Thursday Freddie Mac report, because the market's been so up and down with the interest rates, whatever happens on Thursday isn't a real true reflection of what's happening right now. So
I mean, it is. It's
about a quarter drop.
It's the same tool that we've been using because, you know, the reason. So, yeah, I would say it was a point. Well, I'm looking at it was a 0.14 drop from last week.
Right.
Which, so 6.94 2 weeks ago, 6.88, and then 6.74. So 0.2 down from 2 weeks. But we're still, you know, slightly higher than we were, you know, 4 or 5 weeks ago, slightly higher. So it's, to me, these aren't big movements, right? This is nothing that I'm concerned with. So basically, when I'm talking to people about rates, I'm basically saying, yeah, they've pretty much held. Yeah, they've pretty much held.
And my opinion on the interest rates, what's going to happen is pretty much what's been happening so far. I think we're going to be hanging around 6.5%. Could we get up to, 6 3/4 or 6.8 something? Yeah. Could we get down to 6.3 or 6.28 or something? Yeah, that could happen too. But we're going to stay probably within that range I just talked about, a 0.5 point of range, which is pretty much what we did from November of last year all the way through now. We've been staying within a 0.5 point of each other over the last 5 or 6 months. We had the peak of 779. Listen to this, guys. When we hit 779, and I was looking at this yesterday, when we hit 779 in November 2023, the last time we were at 779 was in 2000.
Oh.
Wow. I thought it was 2009. It was 2000. Now, where we are right now, that's 2009 prices, interest rates. We're at 2009 interest rates right now. So this is what you got to remember, is that our inventory is still low. So if you're thinking that you want to buy, but you're trying to time the market, timing it based on the interest rates is probably not the smartest way to go. What you really should do is go out and find the house that you love, right, that you want to buy, that you could afford, buy it. And what you're trying to do is you're trying to stave off the appreciation. You're trying to grab appreciation while it exists because we're still appreciating, right? So you're taking advantage of appreciation. You may be paying a higher interest rate than people 6 months or 8 months or a year from now are paying. But if that happens, you could, if the numbers are smart, you can go ahead and refi and then take advantage of that refi. But now you're going to look like a genius because, yeah, you paid a higher interest rate when you bought it. You had slight appreciation. If the rates do go down enough for you to be able to refi, that means that the rates are pretty good.
Yeah.
And that means there's going to be a lot of buyers coming into the market, which means what? Prices are going to start going up. And now you're in the slot to get that big boost when it happens. If you start buying when the interest rates go down, you don't get that big boost. You're paying for that big boost because now you're competing with all those other buyers that are trying to get that super low interest rate. So my advice is, if you want to buy, it's in your future. You're going to stay there at least 5 years, 7 years in the house. If you do buy, that you go ahead and buy now and you enjoy the appreciation and enjoy the tax breaks you get and enjoy the homesteading that you get and enjoy that and watch your wealth grow. And then take advantage of the market if it shifts in your favor, even better. But waiting around for that interest rate to drop, all you're saying to yourself is, I want to pay more money for the house.
Well, and unfortunately for the people that have that mindset, they've been waiting for numbers for too long. They're always waiting. It's always waiting, right?
Yeah.
I'm always waiting for this number, this magic number. The key phrasing that you put together there was you can afford. Getting too locked in on what the interest rate is I understand it is a part of the equation, but you got the insurance, you got the cash. As long as you're in a position to where you're like, I can buy, just get with Mike, get the numbers, see where your numbers are. You'd be surprised what you can get done, even at 6.8% interest, if you're really a buyer and you're in a position to buy.
Yeah,
Well,
we
Go ahead. I mean, I was going to say, I just saw an article about where they're trying to do affordable housing in Jupiter, and they're building these apartments. The affordable housing for a 3-bedroom apartment is $4,200 a month.
Yeah, and they're having a conniption fit about it.
I mean, you can,
That's affordable.
That's a mortgage.
Yeah.
I mean, but you could buy a 3-bedroom house.
Yeah.
For that.
Yeah.
Like,
And
so if
$4,200.
that's
but
what
if
you're
you
going to
have-
be paying in rent, you got to go buy a house with Mike.
4 roommates, it's only 1,050,
Yeah.
1,050 each bunk beds. I mean, we say it all the time. I feel like we talk about this a lot, but it's really important. So if somebody wants to wait for something, that's fine with me. Wait for, but what are you waiting for? You're always, I'm almost always, invariably, you're waiting for a monthly payment that is within your ability to pay. So with affordable, number one, you got to be able to qualify for it. Number two, you know your numbers and you can afford that payment. And so, like when we're talking about rates, we're talking about a week over week change. Guess when that is important is when you're ready to lock in a rate. Like, hey, do you want to wait? Do you want to lock it now? You want to wait till Thursday? You want to wait till next week? You're not locking a rate until you have a close date. You don't have a close date until you have a house that you're in contract on. So you can't just wait for rates. It's fine if you want to say, I'm not buying until a monthly payment on a house where I want to live is this. Great. That's fine.
I can't spend more than $2,800 bucks a month.
And I got
on my
this much.
mortgage.
The guy got this much cash to bring to the party. Perfect. You know your numbers. You're actually able to make that analysis. Look at those numbers on a specific home that's interesting enough to you, right? Like you look at it online. Whether you're getting email drips from Jim or you're just doing your own sort of searching.
Yep.
You can analyze those numbers. And then if it's a house that kind of checks your boxes and looks interesting, you want to go see it. Right. So that's the type of waiting you should be doing. Number one, if you don't know if you can even qualify and you're a buyer,
you're not a buyer.
You're not really a buyer.
You're not a buyer.
You're a tire kicker.
Yeah.
You might not even be a tire kicker. Right.
You got to have the plan and you got to know your numbers. You got to know your numbers, and you don't have to pull the trigger, but you have to have the weapon locked and loaded, ready to go, so that when the opportunity comes, you're ready. Because if the opportunity is good, especially if you're a little iffy about what you want to do and you're being very selective, which is okay.
It's
but
great.
if you find it and then you like it, if you like it in those circumstances we just mentioned, there's going to be a lot of other people like it too. And
Sure.
if you haven't gotten your stuff together, you're not even going to have time to make the offer. It'll be bye-bye property. So you got to be ready in advance.
And it's also like, how invaluable is it to get out in front of any potential problems? Like if you are a buyer in the next 2 years, even, right? How great of a resource is it to have a professional who knows about credit improvement, credit optimization, have a look. It doesn't cost you anything but the conversation and the time and maybe, the emotional turmoil of hearing, hey, you're not quite there yet, but here's your doctor's orders, right, Johnny? Like, here's what you need to do. Here's what you need to focus on. Even if you can't implement it right now, here's the things that you need to be thinking about doing. Here's the amount of cash that you need to think about saving. Are you able to save $300 a month? Okay, well, if you need $10,000, it's going to take you about this amount of time. Go ahead and religiously put that money into the savings account. And so
the cheat code, you're getting the map, you're getting the,
and it's really, I know it's hard. Sometimes it's difficult to have that analysis done. It's like, John, so I want to say you go to your proctologist, Johnny. You have to do that at some point. Like, you're a little bit scared about doing that, but you're going to get good news.
I don't know. They feel very different. I don't hesitate to pick up the phone and call you, go over my finances. But
it can feel like that though, because I'm going to look into it, and like you haven't paid these medical bills. Why? What's going on? Right? I don't really care why you haven't paid your medical bills. All I care is that they're there, and is it something you can deal with or not? Right? Like, so. And I can say, here's how I can't help you clean up all your negative stuff, but I can tell you how to optimize your positive stuff.
Yeah.
Right. I can tell you what you need to be doing to make sure these, I talk to people about like a report card all the time. Johnny, your freshman year, you skipped school, you got D's and F's. You're not going to be able to go back and fix those. You can't do credit recovery on all those. What you can do is now focus on putting some A's on that report card, and and make them A pluses.
Well, I think a lot of people think I have to clean everything up, meaning like I got to get everything paid off.
Yeah.
And you can like lay out again that roadmap. There's like your money's going to have more value going at certain things, right? You can say, hey, let's tackle this. This is going to give you good advantage here. We'll get that down to here. Like, you can really pinpoint what they should do versus this idea of I got to wipe all my debt out. No, you just got to level it off. You got to make it make sense for the lenders to be like, oh, they're not overwhelmed.
And sometimes it's like, hey, you're green light across the board, except maybe you need to tweak a couple things.
Right.
And guess what? We can have you there in a month, or I can have you there in 2 weeks if you got a little money to throw at it, or maybe it's going to be like a 6-month thing because you got to do a couple more things.
Yeah.
So it's that plan.
I know it can happen because I did it.
Yeah.
I've been there. It is, you have to have the desire. You have to be in that mode though. You really do. And I think if somebody's picking up the phone to have that conversation with you, they're probably ready to put it into gear, at least try to get in that mode.
Listen, I have a lot of the times I have that initial call, and some people don't believe that it's even possible for them now. Like for whatever reason, there's like, no, it's not. And I'll say, yeah, you're green light.
And
like now,
what?
maybe the hard part is finding a house that checks your boxes, that results in a payment that you can afford. That might be the hardest part, but you're green light, for qualifying. Like, you can buy. I did one this week, John.
Mm-hmm.
David sent somebody over. Like, she's deciding, do I want to rent for another year or can I buy? The answer is, yeah, you can buy. Can you find what you want? That's you work with your expert real estate
agent. Then we got to
agent,
figure out if it's doable or not. But she definitely qualify for a mortgage.
Yeah.
It's just whether she can find what she wants at that price. And that's what we're going to do. And the answer might be yes. And the answer might be no. Or the answer might be not right now. Like, we have to wait for the right property to come up.
Yeah.
And then we find it. I have a question for you, Mike.
Years of working out and a healthy diet.
So, so let me ask you this. So let's say somebody like 6 years ago bought a house for, I'm making up numbers here, $500,000. They only owe $400,000 on it now.
Wait, start again.
Okay, so they bought a house for $500,000 and they had a $400,000 mortgage, right? So let's say the $400,000 mortgage is at 4%.
Yes.
Okay, because it was 5 years ago or something, right?
Okay.
Might be a little higher than that, but let's just say it's 4% for this talk. And then they'd really like to move, But where they'd like to move is going to be more expensive because it's a different type of lifestyle they're looking for. And they're like, the problem, and I said to them, well, one of the good things is you have so much equity in this property now, because over that 5 or 6 years where they paid $500 for it,
Yeah.
that unit is probably worth 1.3 now. Okay. So, and they only owe 400,000, right? So I said, what you're not considering is, in order to get you to that new lifestyle you're looking for, because they're worried about, oh, I'm going to have a bigger mortgage probably, and it's going to be at a higher rate than I have now. And they're concerned about that. But the lifestyle change is going to be pretty dramatic. Like, you're really moving up compared to where you were at the initial one. So let's say they were buying something for 1.5 million, but they had, let's say they were putting $800,000 down, right? So now they're doing $500,000 mortgage like they originally started with the original house, right?
Yeah.
But now they're paying the higher interest rate. So instead of paying 4% in this example, now they're at
6.5,
6 3/4 or whatever, right?
Okay.
How much difference is it going to be, do you think, like the mortgage for the extra 2.5 points?
Okay.
Like a
Why
monthly
don't we take some of
payment.
that cash and buy them?
Here's what I think. Since we're inventing new products today, we're going to invent one right now.
There we go. Good.
You're going to take your existing $400,000 loan. You're going to transfer it to the new property.
Well,
we're going to securitize it instead of the existing home. You're going to sell that home, or we're going to move the loan, and that's going to be secured by the new home. Bring it with you.
Let's go.
What do you think of that?
Yeah, let's do that.
That sounds good, right?
Yeah.
Why couldn't you do that?
If the lender was down,
If
why
you had
wouldn't
enough
they?
cash, right? You got your $800,000, and you all you need is a $400,000 loan. Why can't we just bring it with us?
I know. If they did, I had thought about that weeks and weeks ago. Could you imagine if they gave the ability to take your assumable mortgage, if you had an assumable mortgage, FHA or VA, and that you're able to assume it by bringing it over to your new house? How cool would that be? Right?
Yeah, we just need a transferable loan product.
And you know what? I was thinking, really, what's the downside on that? As long as the same lender was willing to make up the difference, because they're getting the same amount of mortgage rate they were getting on the mortgage that they gave that person anyway. So they're making the same amount of money, and now they're not losing the mortgage and, losing all that extra money for the payments over the years. And then you give them the extra money to make up the difference for the house, and then you get the higher interest rate from that. Actually, that lender is better off than just having the house sold and then refinance, because they might not get that business. It might go to somebody else.
Just have to adjust the equity.
Yeah,
because
just the equity, right, and have a second mortgage.
More taxes.
Well, that will
be
be
more.
But you build that into the second mortgage, right?
But none of that matters to the lender anyway.
All they care is that they're going to keep getting paid on this. On the interest is there. Just like as if you didn't sell.
Mm-hmm.
Just as if you stayed in the home.
I think you should just be able to carry that mortgage over to your new place.
All right,
and that would solve a lot of problems.
We've got 2 new businesses right here in this room today. So let me answer your question.
We want 20% equity interest on that idea, guys. So anybody take an idea, we want 20% for that one, because I like that one better. Anyway, so let's just say that you had a $500,000 mortgage at 6.5 versus a $400,000 at 4.
Can we just do 400 and 400?
Okay, if you want to do it that way.
I'm just going to plug in the numbers, Jim. Just bear with me.
So what we're doing right now is
we're saying 4% versus 6.5?
Yeah.
Okay, on a 30-year?
Yeah, on a 30-year.
Okay, so it's $600 a month difference.
$600 a month more. Okay.
So as a percentage of the loans, 1.5. Well, we went up 2.5%, and it's 600 on 400, or $600 on 400. So it's 1.5% increase on the payment for 2.5 interest on the 30-year loan. I don't know if that's going to be linear,
right?
But there's the answer. It's
about $600.
$600 more just on the principal and interest.
Yeah, and then Jimothy's right. When you're buying the new house, you're going to have a higher, probably a higher tax bill than you will at the house that you just sold.
Yeah.
So you're going to pay more money for that. The insurance will be higher because you have a higher valued house.
Insurance might be
could be the same.
Could be the same.
Could be the same.
Could be lower.
Could be lower.
If you're buying a newer house in Florida?
Yeah.
Oh, okay.
But also, you could be buying a newer house.
Yeah,
so now
that's
you have a
true.
newer
Yeah, that's
roof,
true.
Yep.
That's true.
smaller.
But the point I'm trying to make with
What
this,
did your insurance do with your newer house, Timothy? Did your insurance
Way
go
down.
down? Way
Way
down?
down.
Well, it went down because I went from an older house with an older roof to
Brand
new
new.
construction.
But went way down?
Yeah.
Way down.
Yeah, about 1/3 less.
That's
Mhm.
pretty good.
Yep.
yeah, pretty good.
You could have gone lower. You went with
How low
better
can you go?
coverage.
All the way to the floor.
You went with the premium coverage, right?
No. Well, the middle of the road.
Middle.
Yeah,
Okay.
yeah. Because that's what Ross does. He gives you, a budget plan and then a premium, and then sometimes in between. And I think we chose the in between, if I remember right.
Yeah.
Want to talk about termites because for the first time in 10 years or so, I have to actually tent. Well, not me, but a house that I have to sell is going to be tented. A lot of people, when they hear about termites, they freak out about termites. And the funny part about termites is, at least my experience. Now, if any exterminators out there, they want to call and tell me I'm wrong, cool.
Yeah.
I love that. Call me. Don't worry. 888. Nope.
877-927-6969.
877-927-6969.
There you
Thank
go.
you, Johnny.
Well, you know who gets excited when they see a tent is the exterminators, because the neighbors are freaking out. They're like, wait a second, what's
We
going
got
on
termites
here?
in the neighborhood.
No, the termites are invading. Right.
Well, what I learned is over the years is that a lot of times termites can be dealt with spot treatment, so you don't have to tent. Everybody hears termites and they just think automatic tent. I used to think that too, but over the years of being a realtor for so long, I learned that a lot of times the pesticide companies will say you could do a spot treatment on this and it won't be a big deal. But I learned a bunch of stuff in an local article in one of the local newspapers. We're in termite swarming season. So there's 3 different seasons for termite swarming, and they're all between the spring and the summer, and different types of termites swarm at a different time. So there's 3 really major types of termites we have down here. I've only heard of 2 of the 3. Maybe I heard about the 3rd one, but I forgot about it. The first one's drywood termites. Those are the ones that just kind of go to one part of your house or something, or a tree, and they just stay there. They don't really spread out, and they'll just live in that one branch or that one 2x4 or 2x8 or whatever, and just stay there. They don't go all over the place.
And their diet consists of dry wood.
Dry wood. All they're doing is eating wood, right?
Not live wood.
And and then you've got the Formosan subterranean termites. And I've heard of those before, and they've been around. Both of these other ones are new species, but they've been around since the 90s. And what's so crazy about the Formosa, they're spreaders. So they don't just stay in an area. They're designed to finger out and create colonies and underground tunnels and all that. But more importantly, because they're subterranean, they eat concrete. So they'll eat your concrete foundation. They don't just eat wood. They're pretty heavy duty. If you got Formosan termites, you got a problem, right? If you don't take care of it. Drywood termites, it could last a long time, and even if you don't deal with it for years and years, usually you can catch it in time. Then there's the Asian subterranean termite. They too are spreaders. They might start in a tree and then finger out as much as 100 yards away from the tree, which might be a lot of fingering, right? Which could be right into your house, right, or your backyard or something like that. So the seasons for the spreading are Asian termites swarm in March. The Formosan termites start swarming in April and May, and then the drywood termites do from May to June.
So we got Asians swarming right now.
So the Asians swarming right now.
They're all over.
When we were at the house,
Pretty sure they were Asian.
When we were at the house,
how could you tell?
Yeah, how could you tell they're Asian?
Oh boy.
Oh, we're going to be canceled now. Here it goes. I know it. I can feel it. Here
the
it comes.
China termites. Sorry.
So
I just read something, Jim. It says they can't chew through concrete, but they displace small grains of concrete one at a time to break through. So they're
just
excavating
moving the little grains of sand.
They're like Andy Dufresne and right? Like just chipping away.
Yeah, they're just chipping away at it. So
there is truth to that. I mean, I've heard people say that, and I just thought, well, they don't eat termites.
Yeah, so I didn't know that it wasn't.
Apparently, there is something to be concerned about, even with with concrete block homes.
It's just like those iguanas. The iguanas screw up those seawalls really, really bad.
Oh, yeah.
The concrete
just dig
seawalls, they
through.
can damage some
Yeah.
seawall, man.
Big
So yeah, and
Right.
who would think iguanas can start attacking concrete when you think about it,
Right.
right? But with these with the termites that happened in the house that we were previewing to sell, we could see the silvery wings all over the place. There's a lot of wood in this house, and you could see, and it's a 1977 house, and you could see the wings all everywhere. And we had to decide, are we going to go ahead and tenant it because it's going to be a vacant, it's an estate property, and we were decided, do we go ahead and do it, or we just wait and let them do the inspection, find the termites, and then
By that
deal
time,
with
the
it
house
then.
might be gone.
Yeah, no, I don't think so, because this is drywood. It was drywood termites, but the thing we decided was, because we're going to bring in a cleaning crew also, that we should just go ahead and tend it. That way, when the cleaning crew comes and they get rid of all the wings and all that, when they vacuum and clean it, and they get, because there were a lot of wings all over the house. And when we got all that taken care of, we'll give them a bonded, show them that we did the termite stuff and that we have a bonded house that's bonded for termite, so that in the future for the next year, they don't have to worry about it. It'll be covered. And that way we just nip it in the bud and we don't have to take a loss. If you don't do it that way, the bad downside of that, the seller's pulling the money out of their pocket to deal with an issue for a house they're not going to own very long. That's the downside, is the outlay of money. The upside is you don't have to negotiate it when the buyer finds out about it.
Right.
Because it's already taken care of.
Right.
So you already controlled your costs, because what happens is buyers don't know what it costs to tent a house. So if you talk to anybody in general and just said, hey, how much does it cost to tent a house? It's usually way more money in your mind than it really is. Like, what would you think this is a 4-bedroom, 2-bath, 2-car garage home, just round it off. Single story.
So how many square feet?
2,100. So what do you think for termiting, tenting a house?
10 grand.
Okay.
3,200.
Okay.
I was going to say 3. So I'm
Yep. $1,700.
Oh,
See, that isn't that much.
Jimothy was about
That's
to
what I'm
say
saying.
1,600.
So here's
He's on the
another.
phone
There
now.
you go. He's
Yeah.
on the phone. So
Oh.
so here you go. It's like
We're all overestimating.
right.
Yeah.
That's what I'm saying. And
by-
this is a perfect real life example of what happens in
Considerably.
real life when a listing agent does not know how to negotiate well. I knew the number. I knew it was $1,700. We actually had 2 quotes, 1,700 and 2,200.
Yeah.
Right. We're going to do the 1,700, but it's going to be the same bonded and everything. So why not? But we know
Walter
the
White
number.
will do it for $500.
So who?
Walter White.
Well, oh yes, he will.
Right?
Right? Yeah, but then you got to clean up the meth afterwards.
It's a
So you
risk
got
of
to-
somebody
that's
coming
what
in
I-
anyway. What's the difference?
So, but
the
the
termites would be.
yeah, but the termites, and they're going to have a good time in there too. But the thing this is a really good example of understanding how to negotiate with the buyer you don't even have yet. If we didn't know those numbers and we didn't have that number in our mind, when the buyer comes and they say, oh my gosh, you've got termites and we got to tent the house,
They think 10 grand.
and you guys are all thinking 3 to 10 grand, right? And it's really 1,700, and they come back and they say 5 grand. You guys might say, deal. I thought it's going to cost 10. I'm saving myself some money, when you don't really know anything at all.
No idea.
And that's why it's really important to have a good agent to sit down and make sure you understand all your options and everything. Because sometimes we decide not to do it. We say, you know what? We know it's there. We'll let them do their inspection. We'll deal with it at the back end, but we
Just
have our
negotiate it.
numbers and we'll negotiate it, but we know our numbers before going in. So it's really important thing. But anyway, I just thought this is funny. It's termite season. I'm tending a house for the first time in 12 years and just thought it was weird. It's just another thing. I'm reading the news is like, I'm doing that. It's like another thing.
And was that house just curious? Was it not lived in for a while, Jim? I know you said it's an estate sale.
It was my
Oh,
uncle's.
okay,
Yeah. So
okay.
he just passed recently.
Okay.
So yeah.
When
So
we
that-
bought our house during the inspection, it was found that there was termite damage to the trusses, to like
Yeah.
one of the big trusses, and we had to have it, whatever, redone
Mitigated.
and fixed, and then they gave us, paid for, but whatever you call the bond, whatever,
Yep.
for the next year of
Mhm.
all the termite stuff, and continue to pay it.
Yeah,
just
and then
for those
it's
little,
smart
like,
to keep the bond.
Things that just go around in their placed in the grass around your foundation, and you don't even see them. And
Yeah, those little green insert thingies.
I don't even know if you
Typically-
need those.
I
Remember, Jim,
always
we had
got-
that we had that one house where they did the inspection, and up in the roof, in order to make room for the air handler portion of the AC, they cut out
Oh yeah,
one of the roof
I had
trusses.
2 houses like that.
Yeah, they
Wow.
just they cut it out, and they're like, yeah, no big deal. Like the AC guys are like,
The
yeah, no big
pan.
deal. We could just do that.
cut
No
this
The
out.
problem.
AC pan wouldn't fit between the rafters,
Yeah,
so they just started cutting crap.
yeah.
And the thing was, one of them, when they cut it, and it was a long time ago, like 10 years earlier or something, or 8 years earlier, when they cut it, you could see all the sawdust still there. Like they, you could just, it almost looked like a fresh cut. And the board was laying exactly how it fell. Like when they
Didn't
were
even
cutting
take
it,
it
when
out.
it fell, it just, wherever it landed, that's where it was. It looked like an archaeological site, like a time capsule.
you have your little brush.
Well, they're AC guys. They don't clean up.
Yeah.
That's the carpenter's job.
yeah, exactly. Right. It's so crazy that they just do that. But I had 2 houses like
It's
that.
crazy what people will do.
Yeah, it is. It is kind of nuts. So it's like, we don't need this board. It's only holding up the roof.
Yeah, this is in my way. That's all that
Yeah.
matters.
So
It's like one of 30. Like,
Yeah, there's a bunch of them in here.
I wanted to talk about what's going on in the acreage because I wasn't sure if they were going to pass this regulation, and the county commission looks like they passed it. So now there's a regulation coming out in July 1st that anybody that has a tractor trailer is not allowed to park it in the acreage on their property. And a lot of people have moved there specifically because that's the kind of stuff they wanted to be able to do. And you can't do that in a lot of other places in the county. So now there wasn't any regulation that allowed them to do that, but they took advantage.
It did it feel to you though, like, I don't know, in my last probably 5 years, people that have been moving out there thinking that they were getting 10 probably getting so bad with years, getting old,
I
Jim.
know me, I'm thinking that
Yeah.
same thing.
Man, there are
Yeah.
times I'm like, oh, the
Yeah.
90s. That was like 10 years ago.
I
No,
know,
clown,
it's
that
like,
was 30 years
no.
ago, man. I just, it's felt very predictable. Like as the growth going west, it's like, you're not going to be able to maintain this lifestyle for long. It's going to change.
That area is going to be Weston.
Yeah.
That's Weston. You're looking at Weston.
I know
40
they don't. I
years
know they
ago.
don't want to hear that. It doesn't make anything better. But this feels very predictable. Like
It
this has
is.
been coming.
So enjoy it while you
Frustrating.
can.
Sucks.
It's
Yeah.
one of those things. Enjoy it while you can, but it's going to go away forever, and it's just going to be. Remember back then, what you
Yep.
used to do all this stuff, and
Oh,
now
yeah.
there's like,
yeah,
you know,
it's
Oh, I hear- I
lots
hear-
life, acreage life. Do what
Totally.
you wanna.
Yeah,
Mhm.
Locks Life. I see the
Yeah.
stickers.
the reason why they don't want the semis there, it's a very good reason though. They're saying that the machines are so heavy that they destroy the gravel roads out there, and then they have to keep fixing the gravel roads.
Pave them.
because yeah,
Pave them.
Yeah.
well, which
You
the
pave 'em.
owners don't want to do.
Well,
That's part of their thing.
Maybe to keep their trucks, they'll pave the roads.
Yeah, maybe.
And while you're doing that, why don't you
Yeah.
run some city water out
But
there?
there's a lot of people that don't want the semis there too. So it isn't just the county. There's a lot of neighbors that don't want the semis there. So
There's a lot that do.
there's
do-
a lot of
they-
neighbors that do. You're right.
There's a big push out there because I live out in the acreage, and
Yes.
so you see a lot of neighbors are putting up signs now, like about county fighting the county ordinance people. Like, so I suppose there's a number of unpermitted structures out there, and kind of people with chicken coops and like all this type of stuff, and so they don't want the permitting, the building, the code enforcement people like coming around and like
The
starting to
sweeps.
they do these sweeps and they say,
Yeah.
hey, what's this, and so
And that could happen. I've seen that
Yeah.
when I was a newspaper reporter, where cities would get fed up with certain neighborhood because there were too much rabble rousers and they weren't agreeing with the city or the government wanted to do. And they just went in and started doing code enforcement sweeps.
Ugh.
Oh, you have that unconverted garage. You have that converted garage.
Right.
Where did that pop up?
Right.
And they
Yeah.
start saying, "Oh, when did you put this fence in?" And they
Yeah.
start doing all that.
you put it in a shed. You got a shed in there
Yeah.
that was never permitted.
Oh, and it's
so-
only
You
2
didn't tell
feet
the
off
government
the fence
about
line.
it.
Yeah, tell us.
I'm sorry. I
You
know
wanna
that
take
we
this
have a
phone call?
call. Yeah, we have a call.
Who we got on hold there, Jimmy?
We do. We have Greg on the line. He has a homeowner's insurance question, and he's on the air with us. Greg, welcome to Florida Talk Real Estate.
What's up, Greg?
Good morning.
Hey,
Morning.
Greg, how you doing? Thanks for calling. How can we help you?
I built my house 18 years ago, and in the bathroom, there's a partial wall about 5 feet high, separates the tub from the shower area.
Mhm.
And about 7 or so years ago, I noticed that the drywall at the bottom edge was starting to crumble.
Mm-hmm.
And I know that the other side of the wall is where the shower is, so I figured it's getting in somewhere, but I couldn't figure out where the water was coming from to damaging it. So I cut out the drywall, looked inside the wall. It's dusty at the bottom. There's no water anywhere in there, so it's a bit of a puzzle. So I repaired the drywall, painted it, and said, all right, well, cross my fingers. And about 3 years later, the same thing happened again. So this time I hired a contractor. He couldn't figure it out, but he decided he was going to seal all the grout lines, the tile that's on the shower side, the back side of where the damage is, and then replace the drywall, painted it, and then said, I think we're good. And it came back again, and I hired a different contractor, and he looked inside the wall and said, I think you got mold now. You should call your insurance company. And I did, and they sent out a leak detection person, and they said, yes, the grout is destroyed, and that's why the water's been coming in. And end of the story is they said, well, you should have called us 8 years ago instead of now, so we're not going to cover this.
No way.
My sister said, and you didn't fight them? I'm like, they said they're not going to cover it. What am I going to do? I can't force them to cover it.
Mm-hmm.
Should I be challenging
is the leak? Did this just happen recently, Greg?
No, this is the third time it's happened.
Yeah, but I mean,
And
it's an ongoing situation right now. It isn't solved, right? You still have this problem right this minute.
Yeah, and what the leak guy says, he can see where the tile on the end of the wall that is where there's cracks, and he says that's where the moisture is coming in, and that's why it's dissolving that.
But when you opened it up 8 years ago, there was no mold.
I did. I mean, I don't know how to detect mold, or at least didn't then. I mean, I know what it smells like now.
Or like, I mean, invisible, or, you didn't see anything like, oh man, shoot, look at that. I need to, there wasn't anything visible that alarmed you, right?
Correct.
I mean, I think that's unfortunate that the insurance company would do that. Only, I get it if it was a problem that had been ongoing and you didn't call them for 8 years and you knew about it, but you just found mold. If your kitchen sink is leaking and all you have to do is reseal it, you're not going to call the insurance company.
Right.
You know what I mean?
Right.
Once it's leaking and now there's mold, that's when you call the insurance company. That's the event, So if I were you, I would try and pursue that a little bit.
That's my question for Greg, right? So if he's already gone to the insurance company, they know that he had a problem and now they've rejected it. What is his options at that point? Because, I kind of went through this, Greg, with my company. I went through 18 months of heck. I had to go court. I went through all this stuff. And they said the same thing to me. I had a leak in my house. I hired a company to take care of it was an AC leak. I had the company come in and take care of everything. Now, I didn't file a claim. I just paid for it. I hired a reputable company. And then I found out later that the thing was still leaking, and then it created pretty bad mold in the house, and we had no idea. Then the insurance company said, well, that's your problem because you didn't handle the leak properly. And we started going round and round. So it's very similar.
It's frustrating because you don't want to call the insurance company if it's something minor and you can handle it yourself.
Right.
Because why would you put a claim? The whole idea about insurance is like, hey, something happened and I can't afford to fix it. So that's why I have insurance, so that it would fix it.
Right.
And so little things, if you can, I
So,
don't know.
so if he already
that's
had the
frustrating.
claim, like if he hired an insurance adjuster right now, right, and he hired an insurance adjuster, would there be any value in that? Because they might know how to deal with the
Yeah,
rejection.
I mean, if it were me, I would pursue it, and
Yeah.
speaking to a public adjuster would probably be my first step.
We have, I know Ross probably does too, but we do have several reputable public adjusters. If you're interested, Greg, just to be clear, if you use any of these people, we're not making any money off it. We're not trying to get referral fees or anything. We're just trying to help you out and find reputable people.
Yep.
So, if you could give
So
Jimothy,
this would be a professional who would be an independent voice whose opinion may go farther with USAA than my words would.
Ross, can you respond?
So a public adjuster is kind of like somebody who deals and specializes in navigating homeowners insurance claims and dealing with the insurance company and knowing all the, little things about the claims and getting them to hold their feet to the fire. I wouldn't say they're attorneys because they're not, most of them are not licensed to, state attorneys or anything like that, but they probably have the same kind of knowledge and, I wouldn't say ability to, file lawsuits or, you know what I mean? But the same kind of knowledge as far as where you stand. And I don't know, in my opinion, I think that you would have reasons to file a claim and get it covered.
Yeah, I feel like not having the public adjuster in your situation, Greg, is like bringing a knife to a gunfight.
Yeah.
Those guys are assassins.
And I mean,
on the
there
other
is
side.
like provisions in the policy. If it's something that has been going on for longer than X amount, whatever it is, then yeah, they could deny it. But like I said, in your case, it's not something that had been going on and it was not addressed. You
Right.
did try to address it, and now, now there is mold, so that is the new, I would say, peril. You know what I mean? The water leak isn't the peril. That's old, whatever. But the new
mold now.
mold is but
Yep.
we'll see.
So
Claims are completely different.
just give Jimothy your information off the air, Greg. We'll call you on Monday. We'll give you a couple of people. I'll ask Ross for a couple. I'll have a couple. And that way you can call them and vet them, and then you could choose the one that you like the best.
Okay.
Okay. Thank you so much for
I
calling.
appreciate
Yeah, absolutely. That sucks, man. So hope that gets
Yeah,
better
that
for you
does
for
suck.
sure. And thank you for being with us on a Saturday. 877-927-6969. Running short on time, but still an opportunity for you to join the program. That's a sucky situation.
Yeah.
I just wanted to get back to the trucker part again. There are probably going to be a lot of people that are going to want to be moving from the acreage because they can't put their semi there, and they're probably looking for other places where they could do that. If you're interested, give us a call. We'll figure out a plan on how to get you to your new chapter of your life.
Where do you go for that?
Well, I have a couple ideas, and frankly, I wish there's a couple of people I know I wish that would just buy land and do this for a living. There is so much money to be made by having places for these trucks and other types of businesses to park.
There's lots of space.
It's crazy.
Yeah.
I can't get into too much because I wasn't involved in this deal, although I tried a bunch of times and I wasn't the agent that got it done. It's a commercial deal. There's a family that's been around forever on Lantana Road, and they own a small business. I don't want to say what kind it is, but they also have several acres in the back of the property that wasn't really being used, and they got smart and they started running out little
Storage.
not just storage, but like people started, like if you had landscaping equipment and you had your trailers and everything, you didn't have a place to put it, you'd park it there, and then everybody would meet there in the morning and then take off,
Put
right?
your RV there. put your boats.
Electricians, plumbing companies. Then other people started putting RVs on there to use it as office space, and they have electric and water out there.
Oh.
And then they were running business out of there. There has to be 30, 40, 50 different types of businesses. They're either renting the space just for equipment or running their businesses out of there. They are making so much money as landlords for those things. And let me tell you, people need it. And the fact that they're in the Lantana area, that makes it highly valuable because you're not traveling all God's creation and then hauling back. Like, you're not moving out into like real
You're
far
in
west.
town,
You're
as
right
they say.
there.
Yeah.
So there is land all over Palm Beach County where you can make that happen. I keep talking to people saying, a really passive way to make good money, because once you put up there that you have space that you could lease out to people, they're going to use it, right? So that's an option for some of these truckers. If they don't want to move, we could try to help them find places to put their rigs, right? And we could talk about that. But some of these people are just going to decide, I'm done. It's time to put a fork in it. I'll sell my house. We're at a pretty high equity market. I'll make a lot of money on my house and I'll go find someplace else I'd rather live. And, Okeechobee is an area. I know that it isn't Palm Beach County, but Okeechobee could be a good area if you're looking to put like a rig and live. that might be an area that you go to. It's very rural. It's a lot of farming out there.
That's not Palm Beach County?
No, Okeechobee County.
Oh, Okeechobee County.
County, yeah, not the city Okeechobee County, just west of Martin.
What about farms? The Jupiter farms? Can you have? I know you can have.
I don't know.
Equipment.
I would be. I don't know. I'm thinking that because that's the first thing. Just move a little north because that would be such an easy thing to go from the acreage up to Jupiter Farms. But I'm not sure. And what happens if Jupiter Farms? If everybody goes up there and then Jupiter Farms is like, hey,
all of a sudden
we don't want the truckers there anymore.
Yeah.
So we have to be careful. But that's what I'm recommending people in this situation. Understand your plan and understand your different options and then figure out what's best for you on that one, right? Don't just make a short decision because you might be hurting yourself again. So
is it 100% passed? Like it's, or is,
it is.
Are you still, are they still able to fight it?
It's supposed to be July 1st. It's supposed to start, but one of the commissioners, the commissioners voted unanimously to approve the new changes. But one of the commissioners received support from the other commissioners that's going to give them till sometime in May to offer some kind of changed proposals to try to make it work out better. But there's a lot of residents out there is like, no way, Jose, we want them out. I don't want to hear anything. Some people is like, well, you got to grandfather the people that are already there. Other people are saying, well, you can't do that because it's wrecking our roads. And now we all have to pay for the road destruction that these guys are doing. And I say guys, I mean truckers, guys and gals. Okay, I know female truckers also. I don't want to be sexist.
And there's some that don't identify either way.
Yes, that's right. Oh, I shouldn't have slid
non-binary. They're non-binary.
Truckers.
Convoy, remember that song?
Oh yeah,
Convoy.
Mhm.
So
There's a bear in the air.
So
you got people that have lived out forever, and then people move in, and they're like, "Well, I don't like this." It's like, why'd you move here?
You should have moved here.
Exactly.
yeah, it's true. So I thought that was kind of interesting. Florida's changing so much. It really is changing a lot all the time. And I'm really happy about the time that I was thinking about this. I was so lucky to grow up in Florida from the 70s through up until today.
You've seen it all.
Yeah, I've seen a lot, right? I almost before air conditioning. I was just barely air conditioning was around like 15 years by that point down
Thank
here.
goodness you made it in, though. You know what I'm saying?
I know, right?
Wait, is that true? Air conditioning has only been
think it
around
was
since
only
like
in
the 60s?
I think it was like the late 50s or something. Is
Wow.
when air conditioning in Florida was. I think it was the late 50s. It was after World War II for sure.
You know, I'm thinking I think there was an episode of Mad Men where there was a door-to-door air conditioning salesman. He was trying to sell, hey, we're going to install AC in your house. Yeah. So that must have been what that shows in the 50s, right?
Yeah,
50s,
hell,
60s.
there's still jealousy windows in this state.
Yeah.
So we only got a little time, so I thought we'd have a little fun. So if you guys won the lottery, right? If any of you guys won the lottery, God bless, I hope you all do.
Yeah, seriously.
Where would you live? Like if let's say you had crazy lottery money. I mean,
So we're
not just like
retiring.
a little bit. You could live anywhere you want. You don't care.
Boom.
Don't even worry about the cost at all.
I'm staying in my house.
Where would you stay? Mike's staying in his
Yeah,
house.
because you can vacation anywhere.
Build a bigger
Stay
deck.
in my house. Yeah.
Build a bigger deck.
I might do an in-ground pool instead of the above ground pool.
No way.
A cement pond. No, it's a cement pond, Mike. Where would you? So Mike thinks he might stay. What do you think, Johnny?
I'm buying a nice chunk of land in Northern California.
Northern California?
Yeah.
Wow.
Oh, cool.
There goes all your money.
Oh yeah. I just hit the lotto.
Wait, what are you going to grow? Are you going to farm on it?
No, I got in this scenario. I have stupid money.
Yeah, you have stupid money, so you're not working.
Yeah,
unless you want to work.
Like I don't have just no thank you money. I have
you have FU money.
Right?
Yeah, but do you know how far that money could go in South America, Johnny? Oh, you're gonna pick California,
but I'm living there. Though. Yeah, and
it's beautiful up there.
I got so much right there. Yeah.
Are you thinking Humboldt County?
Not that quite. I come a little
bit farther to the south.
But I'll travel to
so
Humboldt.
Northern California, Ross. If you could move anywhere in the world,
I mean,
oh geez, here comes Indonesia.
Yeah, like Costa Rica.
No, I
shot at you, Ross.
Not that anything's wrong with that,
Shots
Mike.
fired.
I love Northern Palm Beach County.
Nice.
I love Northern Palm Beach County.
Yeah.
I would want a house no bigger than the one I have now, just 1,700 square feet, but I would want a big piece of property on probably on the intercoastal.
Yeah.
And very close to the ocean.
Would you have a
Very
boat?
close to the ocean.
Would you have the boat?
Yeah, I would have a boat.
Yeah.
I would have a big lot on the intercoastal, where you could, beach volleyball court, just a fun piece of property. And
awesome.
Enough for my friends to come over and have fun, and jet skis for everybody to have fun,
like
stuff like that.
Oh, I definitely have like a reservoir, lake or something on my property for sure.
Yes.
Yeah. What about you, Jimmy? Where would you move?
Bora Bora.
Bora Bora. I actually
one of those huts on the water. And,
I was going to say I had
a clear floor,
friend.
and you, as you walk from the bathroom to the kitchen, you see fish under you.
Yeah, that's pretty cool, right?
I love those huts.
Yeah, I love those.
Serious reality. If I had stupid money, I'd probably buy something with like Ross would say, like having 10 or 20 acres, and I would empty every animal shelter in South Florida, and dogs would live there.
That's so cool. That's so cool.
No,
I actually just was talking to a guy. He. It's kind of interesting. He lives in West Palm, and this realtor is going to all the owners in this one area of West Palm and saying, "Hey, I want to buy your house for like 2.5 times what it's worth," because they want to turn this big development project in downtown West Palm, and they've collated a lot of the land already. A lot of people have signed contracts. So his dream is, if he sells his house for crazy money, he wants to move up to the Pensacola area.
Okay,
be near the river. The rivers up there, and then he wants a multi-acres, and he wants only an RV on it, but he wants to have a dog compound for pets and everything to rescue pets. I think I would go a different way. I think I would not that anybody asked, but
what would you do?
I would probably have multiple places. I would not just stay in one. So I'd want one in the mountains. I'd want one at the beach.
Yeah. Oh yeah.
And they don't have to be like
the
crazy.
That wasn't the question. Where would you live?
I mean, I would have a Colorado.
I would live
house,
multiple. I would live multiple places, but have smaller homes, like Ross is saying. Like I wouldn't have like the grand mansion or anything. I'd have a bunch of multiple homes in different areas, so I could just bop around. I know I'd have one in Vegas.
I'd get a
just to mess
plane,
around.
maybe an electric plane, so the
With the
CO2.
I mean, with the string on it, and you.
I can fly around to my various homes.
Oh, there you go.
Yeah.
Well, the reason why I'm asking is there was
battery doesn't run out.
There was an article.
You got some big news for us, Jim.
Yeah.
There was an article that said, "Where would you live if you won the lottery?" So they did kind of like this survey. It was an article I read in the Sun Sentinel. So I thought that was kind of interesting of where people would live. So number one, curious of the top 10 places lottery winners would go if they could live anywhere. Number one. And one of them, one or two, there's a couple there's a couple Floridas in here, not surprisingly. Okay, number one, Hawaii. Okay. Now, resort style villas in Hawaii. So that's kind of what Jimmy was talking about, the resort style villa kind of thing. I don't know if they have the glass floors. I love that, by the way. But number two, urban oasis, penthouses in Honolulu, Hawaii. Number three, coastal elegance, beachfront homes in Malibu. Malibu's south, right?
Yes.
Malibu's south. Okay. Number four, timeless beauty, historic homes in Coral Gables, Florida, right? So that's the first Florida one. Number five, seaside serenity, Hilton Head, South Carolina. Number six, island luxury, waterfront estates in the Florida Keys. That's number two. That's the only two Keys to Florida. Lakeside grandeur, Tennessee's Lake Shores, Southern charm, beachfront on St. Simons in Georgia. Number nine, historic splendor, Asheville, North Carolina. Love that city.
Charleston.
Number 10, Mountain Retreat, Lake Tahoe, Nevada. That's a pretty cool place too.
Sounds good.
So these are all 10 places. A lot in California still, a lot in Hawaii. And just think everybody says
Places that
California
got nice
sucks,
weather.
but people are still moving to California.
Is Malibu appealing, Johnny?
I'm not a Southern Cali guy. The only thing I like about Southern Cali is the Dodgers are.
What about the tacos and stuff?
Oh, yeah, but you can get tacos up north too.
Okay.
Yeah.
All right.
I hear you can get tacos here too.
Yeah.
In Florida?
No way.
Yeah.
No kidding.
Yeah.
They have tacos.
Rocco's?
Yeah.
We are.
I've heard of that.
We are flat out of time on a Saturday. We got the locker room warming up in the bullpen. Thank you very much for being with us every Saturday. Remember, Florida Talk Real Estate is .com. It's your one-stop real estate shop. Remember, on Facebook and YouTube, a ton of information that's shared, consumed. Thanks for being a part of the party. Ross Komarinetz, Brightway Insurance, Juno Beach. I hope you have a great rest of your weekend.
Thank you. I hope you do too. Hope everybody does.
especially Jimothy, birthday boy.
Yeah.
Birthday
Happy
boy.
birthday.
Thank you very much. Appreciate that.
Mike Rao, the mortgage guy from the mortgage firm. Have an awesome weekend.
Yep, you too. Happy birthday, Jimothy. I hope you get everything your heart desires.
Thank you. I
And-
did.
and
Thanks
plus
to you
one.
guys. I did.
Yeah.
Oh, it just moved a little bit. Jimmy D, the Florida Home Pros team.
That's about all you can ask for at this age.
It moved a little
And you
bit.
have to celebrate the little wins, otherwise you'll never celebrate.
Oh,
So
don't say little.
I just bring. That's cute. Jimmy D, it's always a pleasure. Thank you for all that you do for everyone. Always
Happy South Florida, everybody.
have a great weekend.
Thank you.
And birthday boy over there, you gonna stick around, make some radio with
Sure
Joe
am.
Drake,
I
yeah?
think there's like some madness going on right about now, or it's coming up. I believe Selection Sunday is tomorrow.
I can feel it. And what a chaotic day yesterday. Yesterday, you might have had 3 first ballot Hall of Famers all like officially retire in the NFL.
Oh wow.
Yeah.
I didn't see that.
3.
Oh.
So like Jason Kelsey,
Mhm.
probably
Oh, right.
first ballot guy, right? Aaron Donald,
Right.
first
Oh,
ballot.
did he?
Yeah.
Okay. I
And
didn't
Fletcher
see that.
Cox of the Eagles
No
is like
kidding.
he's done.
All
Yeah,
right.
that's a potential first ballot guy.
Mhm.
3. Boom. And thank God Fletcher Cox is retired. You're a Cowboy fan? You're a Commander fan, right?
Eagles there, huh?
Right.
Oh, I hate that guy.
Mhm.
12 years of hating that guy.
Now you
Good
can hate
riddance,
Barkley.
dude. Enjoy your retirement.
Not that you didn't already.
We'll be listening
All right.
as always. Happy birthday, my brother,
Thank you, Johnny. Have a great weekend, all 4 of you gentlemen. Thank you for listening.
and have a safe, happy St. Patrick's Day for everybody that does celebrate. Locker Room is next. Stick around. We'll be back at it next Saturday. Florida Talk Real Estate every Saturday. 2 hours of infotainment right here on Real Radio.